On All About Stocks this week, choppy week for the markets. We'll tell you what your investment strategy should be. Oil companies are in focus this week. We'll tell you if there's any value there in that space for you. And we discuss portfolio fundamentals with Gaurang Shah. Welcome to All About Stocks. Now, this is a show specially meant for long-term investors. And in a market like this, it's a show that you're going to need. Now, if you've been busy at work all week and you haven't had time to really track your stocks or find out what's going on in the market, we've done all the research for you. We've picked the stocks. We have all of the information you need. All you have to do is give us the next half hour. This week, we're going to take a very close look at IT companies and oil companies. We'll find out if there's value in those sectors for you right now. We'll also be answering the questions you sent in during the week. Remember, there's an email ID at the bottom of your screen where you can reach us for any questions you might have about your stocks. Before we go any further, my colleague Avan is here with the latest on how the markets performed this week and what happened with our really weak rupee. Avan.
Well, the phrase that the markets certainly have a mind of their own was put to test this week and in fact proved true. It's been exceedingly volatile, largely on the back of the way the currency has panned out. In fact, it's depreciated, touching that level of 69 during the week. And on account of that, the markets also plummeted through the week. In fact, you had the lowest levels of close to 51.26 being touched on the Nifty. There was a marginal pullback coming in the last two trading sessions, which is why for the week gone by, it's been rather flat for the frontline indices. For the broader markets, though, the cuts weren't as severe, but it has been a fairly choppy week for them too. It was also the end of the August series, which has been awfully disastrous for the frontline indices, which shaved off close to 7 to 8% apiece. You did have the Bank Nifty futures, which also broke some psychological levels on the downside, and most of the analysts are shorting counters, particularly from the PSU basket. So the likes of a Canara Bank, Allahabad Bank, Syndicate Bank, all of these counters, in addition to some of the quality blue chip stocks like HDFC and HDFC Bank, really had it rough. You had the IT basket, which really shone through the week on account of the rupee depreciation. Brokerage upgrades really pushed up the stock price of a TCS, and you also had Infi and Wipro in the limelight on the upside. Sasagoa had a spectacular week on the back of fundamental news. Something like a financial technologies, though, was absolutely beleaguered. There was very high turnover for this entire week gone by, and the movement was largely in tandem with the way the overall currency panned out.
All right, Avan, thank you for that update. Joining us today in the studio is Gaurang Shah, Vice President at Geojit BNP Paribas. Gaurang, thank you so much for joining us. It's such a pleasure to have you in the studio for a change so we can have a conversation. I want to understand from you, in a market like this, what are you telling your clients right now?
Well, any story is very difficult to sell to the clients in this kind of desperate and a very downward kind of a market, and it's like gloom, doom and boom all over the place. But yeah, I mean, these are the times when actually you have to look at your portfolio. If you have some underperforming stocks, when the valuation corrected, Sensex Nifty, you've seen correction coming in almost 15%, sectorally maybe a little bit more. I think this is the time when you need to just straighten up your portfolio if you have some underperforming stocks. Though it will be a pain, because in terms of valuation, the stocks would have bought some time back at different valuation. They've actually gone down to a great extent. It would be painful, but it's better to bite that pain rather than run away from it and do some churning, especially if you have longest time horizon. I know things have not been good over the past couple of years, but I don't think everything is just lost. There is still money to be made in the equity market, and it's prudent to churn your portfolio at appropriate times.
All right, I want to revisit some of the things you told us in June, which was the last time we spoke. You said, avoid companies that have a high foreign currency debt repayment. Avoid companies where promoters have pledged their shares, and avoid companies that have seen sharp corrections in a short period of time. Do all of those things still hold?
Well, I think I said that a while back, and some of those things have actually come out to be true.
Nearly prophetic.
No, nobody's perfect, and honestly speaking, market has got its own mind. So you only have to read into what the market is trying to tell you. Every time you look at the screen of the equity market, Sensex, beat Nifty, it does tell you something. So you have to understand and read it. I still hold out my view, because in terms of currency, we have gone from bad to worst, to be very honest. In terms of pledge share, the broader market correction that we've seen has been huge, virtually carnage over there. And in terms of other indicators, my belief is that we are not yet out of the woods for these companies. So there will be pain going forward from here. So it's better to avoid. And I think in terms of correction that I spoke about a while back, large caps have become much more attractive now. And if there is going to be a recovery that's going to come over a period of time, then my belief is that's going to be led by the large cap stocks.
So you did say that when you look at the screen, it should tell you a story. What is the story that the market is telling you right now when you look at it?
Well, I feel that there is too much of pessimism in the market, and in terms of valuation, yeah, you might be nearing the bottom. Very difficult to say where the bottom lies. But I think give 5-10% correction from here on. My belief is that you should be in a very safe zone. You will not see a fantastic recovery after that 5-10% correction, but you will at least see stability, and that's what is the need of the hour. I think the confidence is shaken, the trust has gone. So if the market stabilizes, especially the currency, I think there will be more positivities emerging.
So if I understand correctly, what you're saying is basically there is value in our market. It's just largely being driven by emotion at this point. So how do we find that value then?
Okay, so you need to look at the earnings which has gone by, and given the backdrop of the slowdown in the economy, I think manufacturing side there's going to be a lot of pain. Services side there's going to be a lot of positivities. I'm not saying everything in the manufacturing will look bad. I think FMCG pharma will definitely do good. Selective autos, two-wheelers, four-wheelers will do good given a good monsoon that we have in the backdrop. And in terms of services, I'm talking about IT especially, given the tailwind of the currency, and given the fact that even if your rupee has to gain strength, it's only there momentarily. So you again have the weak currency and a strong dollar, which is also very positive for the pharma and IT sector.
Right. I'm also going to take you back, since we're talking about sectors, to advice you gave us in June when we spoke last. You said consumption stocks will outperform and pharma is the best way to, a good way to play on the rupee-dollar movement. Do you still stand by that? Should we now again still focus on consumption stocks, because there's a very wide range of movement within consumption stocks. It's difficult to put them all in the same basket at this point.
I understand that, right, Fair. But yeah, like I said, consumption is basically driven by, like almost about 60-70% of our population is dependent on agri activities, and it's one of the largest employment generator, agri activities that is. So my belief is, given the good monsoon, there is going to be demand from semi-urban and rural areas. So consumption-driven stocks will definitely be in the spotlight. My only worry is that the input cost should not go up. Then you have a margin contraction coming in. Possibly it might have a negative impact on the profitability. Pharma, I would say that it is more of a performance-driven sector, and my belief is that given the kind of product lineup, given the kind of approvals that some of the Indian pharma companies have got from the US FDA or ANDA, they will continue to perform. So yes, there is still value.
With inflation going the way it is, and I'm talking about normal household budgets, and of course home loans going up, EMIs will increase as well. Every household's budget is going to get stretched slightly. Are we going to see stocks involved in discretionary spending take a little bit of a beating right now, or businesses take a little bit of a beating right now?
The view is that yes, that's going to happen, and with the kind of borrowed inflation that we talk about, especially with the weak rupee and the US dollar, because of our 70-75% of consumption of crude, I think discretionary spending is going to take a back seat. So all your luxury items, possibly you will see some amount of slowdown, be it luxury cars or be it luxury appliances or whatever be it. So yes, there is a possibility that you will witness some slowdown. All right, we're going to take a few questions there. Mihir has written in. He has 60 shares of ONGC, which he bought at 262. He wants to know if he should hold on to that stock. ONGC ended the week at nearly 250. It's fairly close to its 52-week low right now. What I'm going to do is I'm going to bring in my colleague Ajay to take us through what happened with oil and gas in general. It's been fairly busy this week. Ajay, take us through what happened.
Well, Indian state-run oil companies, oil stocks were in particular spot of bother this week because they had a new worry to negotiate, which was the possibility of escalation in the geopolitical risk. The US-Syria face-off is putting a big risk to the supplies coming in from the region. Syria may not be a big supplier in himself or in itself, but the allies of Syria, like Iran, continue to remain large suppliers, and any flare-up in that particular situation could lead to disruption for economies like India. We import almost 70% of our consumption of oil from that particular region. We also saw that not only the crude prices led to a sharp increase in the Indian crude oil basket, but it also put additional pressure on the rupee, and hence the market at one point in time was quite nervous about these factors. Going forward, the oil marketing companies and upstream companies will continue to look out for how the situation on those fronts pan out, but also a possibility of a diesel price hike is only increasing. By the end of a monsoon session of the parliament, which is in the first week of September, there could be a diesel price hike. The way under recovery burden on oil marketing companies and upstream companies is flaring up, almost talking about 1.8 lakh crore now for this fiscal, there could be a diesel price hike, and that would keep a lot of traders and these particular stocks in focus even for the next week.
All right, Ajay, thank you for that information. Gaurang, ONGC, I'm also going to do a recap here. You had in June told us that you're bullish on the company and that you're positive about the fact that government is picking up that subsidy burden and possibly lowering that burden on ONGC. Are you still positive on the way it's looking right now?
What I didn't know was the rupee dollar equation. I wish I had known that. But unfortunately, things have to happen the way it has to happen, and you have to take it in this way. So my belief is that yes, as far as the company is concerned, there's nothing wrong. Subsidy burden going off the balance sheet to a great extent, and the company, given its ability of investments in the overseas market, my belief is that 250 levels, maybe again 5-10% downside from here, but they should be. And my belief is that amongst the energy side, more than oil marketing companies, downstream companies, upstream companies like ONGC, Reliance, Kanhaiya will definitely do much more better. And not to forget, if the government has to reduce the dependency of import of crude, then it has to push the investment on the domestic market front, that is onshore and offshore exploration activities, tax incentives, etc., will definitely come in. So given the kind of presence ONGC, I would say stay invested. We still hold out our target of about 365. Long term might not be about 12 or 16 months now. It will be a little bit stretched given the kind of pessimism, but yeah, stay invested.
All right, stay invested ONGC 365. Stay holding on to that target that Gaurang gave us in June. We also, of course, on Thursday, we saw both the markets and the rupee rebound as the Reserve Bank of India opened a forex swap window for public sector oil marketing companies on Wednesday to calm those volatile forex markets. The central bank will lend dollars to oil marketing companies for equivalent rupees so they can, of course, buy oil. We have a couple of questions. Mahesh has written in, he has 500 shares of HPCL bought at 311 and 500 shares of BPCL bought at 337 rupees. Should he hold on to them? Both of those stocks on your screen. HPCL ended the week at 167, BPCL at 273. What should he do?
Overexposure to the oil marketing companies, and the point that I just referred to when we were discussing about ONGC. I think BPCL as a conviction call, we are quite positive amongst the three oil marketing companies, BP, HP and IOC, given the kind of diversified profile that BPCL has. So stay invested in BPCL. I think you could possibly look at 435, and we are also hearing noise about oil price increase of about 3 to 5 rupees. Don't know when that will happen, but it will be some relief for the under recoveries of the oil marketing companies. Given the fact that you have two oil marketing companies, my advice would be to look at exploration, like I mentioned. Kanhaiya, after the correction and a little bit of upside, looks very attractive. And given the kind of investment that they are planning, and of course the reserves that they have in the Rajasthan block, and of course in the neighboring countries like Sri Lanka, etc., Kanhaiya should be a better choice. So shift on to, stay invested in BPCL. From HPCL, you can shift to Kanhaiya.
Time for a quick break. When we come back, we're going to review Gaurang's own portfolio. We'll also discuss IT stocks, the only thing that's holding this market up right now. We'll tell you if there's any value there for you. Don't go anywhere. Welcome back. You're watching All About Stocks and ET Now. Thank you so much for staying with us. Gaurang Shah is still with us in the studio telling us how we can still make money in a market like this. It's time to take a look at Gaurang's portfolio. Now, for those of you who are regular viewers, you know that on the 14th of December last year, Gaurang designed a portfolio for us specifically for this show. And we've been tracking this portfolio every time he comes back on the show. The portfolio is currently at an overall loss of 6.3%, which is impressive because the Nifty over that same period is down 7%, which means ever so slightly we are beating the Nifty on this portfolio. I'm going to take you through a list of the stocks and then we'll talk about it. There's IndusInd Bank, Cipla, Godrej Consumer Products, Havells, M&M, ACC, Mindtree, Apollo Hospitals, IRB Infra, Kane India. Now, Gaurang, you are, of course, beating the Nifty here, but there are some stocks that are still causing some pain, like IRB Infra that's down 50% since you bought it. Would you like to make any changes on this portfolio right now?
you always wanted to do better, and I would have been better if the tick was green. I would have making profit of maybe marginally, but nevertheless, it's prudent how I chose this portfolio when I made this model portfolio out. And your question at that time, I remember, why are you picking so many stocks from different sectors? And I did mention to you that it does a good balancing. That balancing has come.
It's come in handy in this market right now.
So that's the main thing. You should always balance your portfolio. You should never overexpose yourself, irrespective how good or bad the sector is. Don't overexpose yourself. Make a balanced portfolio. And that's how you are doing much better than what the market has done. So here I would say that, IRB Infra is a terrible pain over here. Given the kind of sad story that we have. But I would like to do one change over here. I think cement as a commodity is really not picking up. I am taking this step on the backdrop of the government passing the new land acquisition bill, wherein there is a little bit of positivity of things picking up, consumption of cement going up. But I feel that I have held on to this particular stock for a long time. It's not really working in my favor. So I would possibly look at selling out of ACC and looking at buying Wockhardt. Now, this could be a bullet to bite, but given the kind of correction that we've seen in Wockhardt, not to forget, this was one of the stock which had actually outperformed all the sectors in the market last 1.5 2 years, from 150 200 rupees to almost about 2,000 rupees. Then we had some negativities, news flows, etc., etc. But my belief is that post the time and price correction, the stock has become attractive. The downside at close to about 450 or 460 level where the stock has ended is very much protected. So I'm looking at buying this.
All right, selling ACC, buying Wockhardt. Interestingly, the other question I had asked you in the beginning when you designed the portfolio is why you only had one bank. Yeah. Because a lot of other portfolios had more than one bank. And given where banking is right now, it's possibly why this is the best performing portfolio we have on the show right now.
I guess it would have been worse. I would have been worse, that minus 10% when the Nifty and Sensex had done maybe 7%. But yes, like I said, now my weightage is slowly shifting towards the pharma. And the theme that we just discussed a while back. Maybe in the next show that we again have a revised portfolio, I might do a little bit of tweaking and changes and possibly look at giving more weightage, a little bit of more weightage to maybe IT or something like that.
Interestingly, the last time we talked, you sold Tata Steel just before it moved up in June. And you said we mustn't be emotional about stocks. Do you regret that decision?
No, I don't. I don't regret. And honestly, the stock that I shifted to after selling Tata Steel was Havells, which I bought close to about 680 or 700. It went up to 850. I didn't book my profit. It is sub those levels, but I am quite optimistic that consumption theme that we spoke about holds good for this stock also.
All right, so we are actually beating the market on this portfolio. Remember, it has not fallen as much as the market has fallen, and that's because of the stocks that have been picked and the fact that it's diversified across the market. I'm going to give you a quick recap of the stocks in this portfolio now. IndusInd Bank, Cipla, Godrej Consumer Products, Havells, M&M, Wockhardt, Mindtree, Apollo Hospitals, IRB Infra, and Kane India. Of course, we're increasing our exposure there to the pharma sector. Time for us to take a few more questions, and these questions are all on the IT sector. Of course, given the kind of movement we've seen in the IT sector over the last week. Alok has written in. He has 588 shares of TCS, bought at 200 rupees, which he bought in 1987. He wants to know if he should hold on to that stock. The stock ended the week at 2,033. Well, if he bought it in 1987, this is one of the investors we were talking about earlier, someone who picks up a stock and then doesn't look at it for so long. What should he do now?
The stock has just got re-rated fair. I think just very recently, a couple of foreign brokerage houses and domestic brokerage houses have actually upgraded the targets on this particular stock. So you are in a very safe zone. Nowhere close to those levels where you bought the stock is going to be visible in terms of share prices. So you are in a good hand, you are good invested, and you stayed invested for a long time. My belief is that stay invested and there should be much more higher levels for this particular stock. And
do you have a target for TCS?
Well, you could targets could be much more higher, because given the kind of targets that we had set aside, the stock has much more gone above those levels. So maybe you can look at about 2250, 2300 on the stock. Not to forget, this is one of the stock in terms of market capitalization has actually outperformed the larger cap stocks in the Nifty weightage I'm talking about. So that's a fantastic stock to be with.
All right, hold on to that one. Kalpana has written in, 200 shares of Oracle bought at 29.50. Should she hold on to it? The stock ended the week at 29.66. What's your call on Oracle?
Again, one of the stock fair which has done reasonably, not a very liquid counter to be honest, but in terms of business profile, products, clientele, headcounts, quarter-on-quarter performance, very decent performer. 31.50 to 31.65 should be the target. Could be a little bit stretched out.
In fact, when we talked about technology in March, you named Mindtree, Persistent Systems, HCL, and you said Mahindra Satyam and Tech Mahindra. Now that's the same stock. Are these, according to you, still the best picks given the valuation in the IT sector?
Mid-cap IT fair, these are the picks that I would like to be with, and I think these stocks have generated tremendous value since the time we spoke about it in March. To where that time the CMP was and where we are right now, these companies have given a very decent set of return. And my belief is with the tailwind favoring the INR dollar, like I mentioned, and of course the turnaround that we are all hearing from the economic data point in the US and Europe, you are in a safe zone. So stay invested in these stocks.
All right, we have time for one more question. Sanjay has written in 500 shares of Wipro bought at 449 rupees. He wants to know if he should hold on to it or he should sell. Wipro ended the week at 483. What's your call on Wipro?
This is one of the large cap IT stock fair which has actually been a dragger and has been a late performer. But thank God it has started performing. So my belief is, yeah, stay invested, and we have recently, if I'm not mistaken, revised our targets to close to about 510.
All right, time for a break. When we come back, we're going to talk about more stocks: Shriram Transport Finance, L&T, and HDFC Limited. We'll find out if you should be holding on to it. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. It's a volatile market, but Gaurang Shah is here in the studio to help us figure out these confusing markets. Gaurang, it's time for your report card.
Yes, sure.
You had recommended Shriram Transport Finance when it was trading at 515 rupees in June last year, with a target of 640 on 16 months. Now that stock ended the week at 518. It crossed the target. It went lower. It's currently at the price that we might have bought it at if we took your advice. So for those of our viewers who are still holding this stock, what would you recommend they do?
Well, those who did not book out, stay invested. I think if we are talking about the commercial vehicle segment uptick with these new reforms that the government is planning to do and has started ball rolling, I think heavy commercial vehicle and multi-axle vehicle demand for them is going to go up. It might take a little bit of time. But this is one of the companies which is the largest player in this particular segment in terms of refinancing, pre-owned and new vehicles. My belief is that you are near about those levels. There should be scope for it to go up. My only hope is that the interest rates should stay where they are or should start coming down over a period of time but not go up. If it goes up, then we have a devil over here.
Well, that's a hope that we all have as far as interest rates are concerned. But you have a new target on Shriram Transport Finance? You want to keep the target the same?
I would keep the same, given the environment, which is not conducive enough. But in case if things do work out, then we would possibly have a relook at it.
All right, and that target is for a year, 2 years?
Absolutely.
All right. Okay, it's time for us to take one more viewer portfolio before we close the show. We're running out of time. Shyam Kishore has written in. Now, he tells us he's chosen a few stocks to buy and add to his long-term portfolio with an investment horizon of 12 to 15 years. Now, it's nice to hear from a long-term viewer in a market like this. He wants to know if these are the stocks you would recommend he buy or not. We're going to take this as a rapid fire because I'm running out of time and there is a long list. L&T, would you recommend he buys at this point?
He can definitely buy this particular stock.
HDFC Limited, the valuation might seem interesting, but banking is taking a beating. What would you recommend he does?
HDFC Limited is the largest player in the housing finance segment fair. So my belief is that, yeah, and it is one of the value creators. If you actually go to see if a person who's looking at 10 to 12 years, definitely this particular stock along with HDFC Bank creates value. So my guess or my advice is that you can definitely buy into it. And after the correction, the stock has become very attractive.
All right, here's two pharma options here. Here's Cadila Healthcare and Torrent Pharmaceuticals. If you had to choose between the two or give him a third option, which one would that be?
Cadila is good enough. You can definitely look into it. Torrent Pharma is the one that he's talking about. I would say avoid that. Look at Sun Pharma. Post the adjustment and the correction, this stock has become attractive.
All right. He also has some banking options. Yes Bank, Karur Vysya Bank, Axis Bank or SBI. Among this list, which one would you recommend he buys?
I would say Yes Bank is the one that you should go for, and Axis Bank, of course. SBI and Karur Vysya you should avoid.
And United Phosphorus is the next on his list. Buy the stock at this point, this valuation?
I think you should avoid it. You could look at something in the auto pack, M&M, like I just mentioned a while back, since a good monsoon on the drop back, and of course the farm equipment, tractor, etc. I think M&M is a better suit play.
Last on his list is HUL. You did mention that you don't see too much value right now given where the stock is. What would you recommend he does? Can you give him a different option?
Yeah, so in the FMCG minus HUL, you can definitely look at ITC. Of course, their cigarette business vertical has been contributing to a great extent, but their other business verticals have also started to contribute. And my guess is that given the tailwind of consumption, rural presence, semi-urban presence, and of course the growth prospect going forward, you could get better returns in ITC compared to HUL.
All right, very quickly before we run out of time, is that enough diversification in a portfolio? Do you want to add something?
My guess is that, yeah, he should possibly look at Kane India and Tech Mahindra, something in the IT and in the exploration activity, given the tailwind that they have.
All right, 2 extra stocks to add to your portfolio. That's a complete portfolio for you. Gaurang, thank you so much.
Always a
Such
pleasure.
a pleasure to have you
Always
in the
a pleasure.
studio. If you have questions for Gaurang on the stocks that he mentioned on the show, write into us. Email ID is at the bottom of your screen, or just send us the list of stocks you have in your portfolio. It will be our pleasure to take a look at it. You'll find a copy of the show on our Facebook page, and you can reach me personally on Twitter. Thanks for watching.